Well, the WEF cools off on day 4, but this is literally cooling off because it snowed today in Davos. It's a very cold evening, but our guest has kindly consented to talk in this wonderful outdoors. Hani Kablawi, Head of International at BNY, with us. Hani, great having you. Thanks for joining in.
Thank you for inviting me, Niraj.
No, the pleasure is entirely ours because we'd love to understand the worldview from your prism, considering that when the WEF started off, it was about Donald Trump's presidency and the new administration, uncertainty maybe, or certainty around business, if you will, and then AI, energy transition, what have you. A lot of key talking points. What has been the key takeaway for you out of the 4 days?
Yeah, I think it is the two topics, right? There's the topic of growth, and look, sentiment here at Davos was, broadly speaking, quite positive, quite optimistic. The markets are showing that. All governments, right? So if 2024 was a year of elections, 2025 is going to be the year when all of those elected, and a lot of them, by the way, a lot of the voters decided to change government. So those governments are getting stuck in, getting bedded down with their policies, and the policies seem to be very pro-growth. And you're right, the US administration seems to be the most growth-minded, and a lot of other governments are either on a pathway towards growth anyway. We can talk about the UK and again, a new administration there, certainly selling Britain and on a growth trajectory in terms of what they'd like to achieve, as well as other places around the world. So growth is topic number one, and AI is probably topic number two.
Yeah. So let's talk about growth. US exceptionalism for 2 years on a trot before this. Usually, I mean, it's not very usual to see a country which has grown so well for 2 years, been so exceptional, continuing to do that, but it seems to be a real possibility this time around.
It is a possibility. I mean, there's a few strings that can be pulled to try and continue to fuel growth in the US. The government talks about deregulation, or at least a lower pace of new regulation. We certainly don't expect this time next year to be talking about having seen a lot more regulations come into place, and a deregulatory environment is generally consistent with a growth environment. Disclosures are a good thing, but sometimes there's requirements for too much disclosure, and so if you can cut back on some of these things, those drive growth. Approvals for mergers and acquisitions, there's more deals being done already, by the way, but there's more deals that are in the pipeline. And if if the sentiment is that approvals would be forthcoming, then you can see that more deals would be done, and that would be growth accretive as well. So there's a few things that I think are telling in terms of where the new administration is thinking in the US, and the growth mindedness that comes with that.
Okay, so if the belief was that the dollar at the margin would move from US, which it has stayed in for the last couple of years, to the emerging markets. If US growth were to be a bit off, if the interest rates were to come down a little bit, and if the yields were to behave as well, I think the reverse is happening right now. So I'm just trying to think of what happens to flows in a scenario like this for the year 2025, as much as you can see it right now.
Well, look, so we'll talk about interest rates very quickly. We think there will be cuts this coming year.
Okay.
Our analysts are expecting 1 to 2. So on a probability-adjusted basis, we're talking about 40 basis points potentially. However, that's our base case.
Right.
And a base case is only something that you attribute anywhere between 50 and 70% to. So maybe there's some sort of a likelihood, a percentage, a probability that we might attach to interest rates staying where they are, or even potentially going up, to your point. And that's all going to be data-driven. The good news is we have a credible team at the Federal Reserve that is going to be data-driven in putting out a monetary policy that will be thoughtful about where the numbers are coming in.
Yeah, that's true. Okay, fair call. So data-driven, if indeed tariffs come in and then things change, inflationary, we'll get to there when we get there. Okay, that's...
And the inflationary drivers, to your point, right? You've got your potential supply chain shocks, and you've got your which are tariff induced,
okay,
and you've got your labor shocks, if you will. Those are going to be primarily immigration policy induced. So we watch those things and we watch their impact on inflation. The good news, if you are looking for silver linings perhaps in the language that's coming out, I mean, inauguration happened on Monday, and tariffs was not the first thing on the agenda. There was a bunch of other executive orders, but tariffs was not one of them.
Yeah. Does that make that more uncertain is the question. But yeah, but I buy your point completely.
It makes it ripe for deal making.
Yeah, most certainly. Negotiating tool, great negotiating tool. Okay. The other aspect of my previous question was, therefore, what happens to emerging markets at large? Of course, our viewers will be very keen to know about how do you, from where you are sitting, think about India?
Yeah, sure. And look, I think there are some markets that have been benefiting from flows. By the way, BNY sits on $52 trillion worth of assets under custody and administration. We have our big data models that actually tell us on a daily basis where those flows are going from and going to. We correlate exchange rates to them as well. And so we see real-time flows happening and can attribute news cycles to different things that we see from a flow perspective. Look, in terms of flows, there are some emerging markets that have been doing well, and we can expect will continue to do well, primarily driven by a good investment climate within those countries, right? Indonesia, India, Malaysia, Vietnam. You've had a China plus one supply chain environment that has benefited some of those countries. And then you've had a China alternative that has also benefited some of those countries. India is a beneficiary for sure, but India is a beneficiary because there is stability, political stability. There is there's really reasonable growth, right? I know we just saw the third quarter numbers in India come off a little bit, but they came off of expectations of 6.5 down to 5.5, I think. I mean, many countries around the world, much smaller than India, would be very happy with 5.5% growth rates.
Great. Well, we'll look forward to seeing you maybe in India sometime. Hani, never know when that happens, but if it happens, please do come and visit us. But thank you so much for your wisdom and intellect here today and speaking to us, and have a great evening.
Niraj, thank you very much for having me.
The pleasure is entirely ours, and viewers, thanks for tuning in.